As of Friday, April 3rd, 2026, the market is currently open, and Sidus Space, trading under the ticker symbol SIDU, is seeing a significant surge in activity. The Sidus Space stock price is currently sitting at $3.09, which represents a massive intraday jump of 47.14% from its previous close of $2.10. We are seeing incredibly high trading volumes today, already crossing 66 million shares, which is a staggering departure from the typical liquidity this microcap aerospace name usually sees. While most investors are looking at this price action and assuming it is just another speculative pump in the volatile space sector, the reality is much more nuanced. This move comes immediately following the release of their full-year 2025 financial results and a very specific strategic pivot that the market is finally starting to price in. The tension here lies in the fact that while the headlines show a 28% drop in annual revenue and a deepening net loss, the underlying shift toward high-margin data services and a debt-free balance sheet is creating a curiosity loop for institutional players who are looking for the next big thing in orbital edge computing. The general expectation for a company like Sidus Space has always been that they are essentially a satellite manufacturer, a hardware shop that builds and launches boxes into space for other people. If you follow online investing circles or look for investment help on various investing sites, you'll find that the narrative has been quite bearish over the last year. Most people saw the declining revenue from $4.7 million in 2024 to $3.4 million in 2025 as a sign of a failing business. However, the reality we are seeing today challenges that common ground. The drop in revenue was actually a deliberate strategic choice to walk away from low-margin contract manufacturing and instead focus on their own LizzieSat constellation. This is where the expectation versus reality gap is the widest. While the retail crowd was selling out because of fear, the company was building a vertically integrated data platform. By launching their own satellites and selling the data and AI-driven insights from those assets, they are shifting from a one-time hardware sale model to a recurring high-margin software-as-a-service model. This is the kind of development that forces a total rethink of the company's valuation, especially when you consider they ended the year with $43.2 million in cash and zero term debt. When you look at the recent stock movement, the volatility is almost hard to wrap your head around. Only a few months ago, in late 2025, this stock was languishing near its 52-week low of $0.63. Fast forward to today, and we are testing the $3.20 mark during this intraday session. This 400% move off the lows hasn't happened in a vacuum. It's been fueled by a series of successful launches, including LizzieSat 3, which is now operational and delivering maritime data and imaging. Institutional activity has been picking up as well. While names like Nvidia stock or Apple stock dominate the headlines for most people using a Fidelity mobile app or the Robinhood app, smaller players are starting to notice that Sidus is winning contracts with the Missile Defense Agency and NASA. This isn't just about building satellites anymore. It's about being a part of the national security infrastructure. The trading volume we are seeing today suggests that some of these larger players might be building positions, moving beyond the individual brokerage level and into the realm of more sophisticated institutional accumulation. The macroeconomic pressures on the space sector have been brutal over the last 2 years. High interest rates made it nearly impossible for capital-intensive companies to survive without massive dilution. Sidus Space was no exception, as they had to raise roughly $53 million through equity to stay afloat. But the reality of their current situation is that they have successfully navigated that gauntlet. They have the cash on hand to fund their operations into 2027, which is a rare luxury for a small-cap space company. Most people who use a SoFi robo-advisor or look for online investment advice are told to avoid these high-burn companies, but the narrative changes when the debt is wiped clean. If you look at the Fidelity trading platform or the Interactive Brokers platform, you can see the order flow is becoming much more balanced than it was 6 months ago. There is a sense that the floor has been established and the market is now looking for a reason to push this back toward the $5 to $10 range that analysts have been targeting.
Let's talk about the business model for a second, because it's important to understand why this shift matters. Sidus Space operates out of a facility in Cape Canaveral, and they've built a vertically integrated system. They design the satellites, they manufacture them, and they operate them. This means they don't have to pay a middleman for the most expensive parts of the process. Their LizzieSat platform is modular, meaning they can swap out different sensors or AI processors depending on what the customer needs. This is a very different approach than what you see with older aerospace firms. It's more akin to how a tech company approaches hardware, build a standard platform, and then monetize the software and data that runs on it. This is why the 2025 net loss of $29.5 million, while seemingly large, includes a lot of non-cash charges like depreciation and a one-time impairment on their first satellite. When you strip that away, the adjusted EBITDA loss of $17.3 million is a much more accurate reflection of the actual cash going out the door to build this future revenue stream. The earnings reactions we've seen this week are a perfect example of the tension between the past and the future. On the day the earnings were announced, the stock initially dipped because the revenue number looked weak, but as investors listened to the conference call and realized that the company is forecasting a jump to $9 million in revenue for 2026, the sentiment flipped. This is why self-investing requires so much more than just looking at a ticker symbol on a screen. You have to be able to see the story behind the numbers. For someone managing their own individual brokerage account or using a SoFi trading platform, the temptation is to trade the headline, but the real gainers are those who understand the pivot from manufacturing to data. Comment below how many shares of Sidus Space you currently hold, or if you're waiting for a pullback before jumping in. Seeing the community's perspective on these high-growth, high-risk names always provides a better look at where the retail sentiment truly lies compared to the institutional flow we see on the Interactive Brokers fees reports. Looking toward the future, the catalysts are lining up in a way that could create a sustained trend rather than just a one-day spike. We have more LizzieSat launches planned for the remainder of 2026, and each one that reaches orbit adds to the recurring revenue stream. The company is also moving into AI-enabled data capabilities with their FeatherEdge platform, which allows for processing data actually on the satellite rather than sending it all back to Earth first. This is a massive cost saver and a huge selling point for defense customers who need real-time intelligence. The risks, of course, are still there. Launch delays are a constant threat in this industry, and if a rocket fails, it can set a company back by a year. However, the diversification of their fleet helps mitigate this. They aren't betting the whole company on a single satellite anymore. They are building a constellation. This is the same logic you see in things like Fidelity ETFs or various mutual funds. Diversification reduces the impact of a single failure. The institutional interest we are seeing is perhaps the most telling sign of where this is going. When you see names like BlackRock or SG Americas starting to pop up in the filings, even with small positions, it means the company has passed the initial "is this a scam" test that many penny stocks fail. They are a real company with real hardware in orbit. For investors using a Robinhood app or those looking at investing sites for the best small-cap opportunities, this is the stage where the risk-to-reward ratio is often at its most interesting. The company is no longer in the development phase, they are in the operational phase. They have the cash, they have the technology, and now they have the contracts. The challenge is now execution. Can they actually hit that $9 million revenue target? If they do, the current market cap of around $200 million will look incredibly cheap in hindsight. Comparing Sidus to the broader market is also illuminating. While the Tesla stock or Nvidia stock might be the darlings of the tech world, they are trading at massive multiples of their earnings. Sidus is trading at a fraction of its potential future revenue if the constellation model works. Of course, the volatility is much higher, and it's not a stock for the faint of heart, but for those who use a Fidelity brokerage account to build a moonshot portion of their portfolio, Sidus is exactly the kind of name that fits that profile. It's a company that has survived the worst of the market downturn and has come out the other side with a cleaner balance sheet and a more focused mission. The move we are seeing today in the Sidus Space stock price is a reflection of the market waking up to this reality. In summary, the central insight here is that Sidus Space is no longer the company it was a year ago. The expectation was that they were a struggling hardware manufacturer, but the reality is they have successfully pivoted into an orbital data and AI company. The contrast between the declining 2025 revenue and the massive cash infusion they've secured has created a unique window where the stock is finally being re-rated by the market. Today's 47% move is a violent correction of an undervalued situation, but it is supported by zero debt and a clear path to $9 million in revenue. Whether you are using a Schwab Intelligent Portfolios for your main savings or a Robinhood stock trading account for your active plays, this is a company that demands a deeper look. The tension between its past struggles and its future potential is exactly what creates opportunity in the stock market. We've seen how the market narrative can shift in an instant, and for Sidus Space, that shift seems to be happening right now. The authority of their current position comes from their on-orbit success,